We're joined now by Iliad CEO Eugene Beneke, and we're talking about the company's annual results. The group recorded an earnings loss of 174.9 cents per share for the year. This loss includes a once-off restructuring cost of over 52 million rand and a 249.5 million rand impairment. Not accounting for these, EBITDA was over a fifth higher. Thanks very much for your time, Eugene.
Thanks, Brownyn.
Just looking at the first half versus the second half, you've made commentary in your results verbiage that the second half is starting to look much better in terms of the group's overall fortunes. Can you elaborate on that statement?
Yes, it was definitely a tale of two halves. We were forced to make harsh calls and tough calls at the half year. We're certainly starting to see the benefits of adjusting our portfolio. It's more streamlined. And also, pleasingly and encouragingly, the trading environment improved in the second half of the year. At the half year, turnover grew by 4.6%. Second half of the year, approximately 10.5%. And this trend is continuing into the first quarter of 2012.
Now, some would say that you're a feeder stock into the construction industry, effectively. Do you feel that that is a fair definition? Well,
historically, we've been biased towards contractors operating in the residential market. And hence, the slowdown from 2009 onwards, we were not as robust as we would have liked to be. A lot of effort's gone into balancing our portfolio better and making us more accessible to your cash purchaser as well. And the cash contribution to overall sales has increased, and the balanced portfolio and the more streamlined portfolio will stand us well in the future.
Kelo.
I want to ask, Eugene, you've experienced the full wrath of the cycle. You went up with it in the heydays, and you went down with it in the past 3-4 years. What are the key primary lessons you've learned from that you've implemented now to reduce? I don't think you can ever take away the cyclicality, but to reduce it.
Yeah, and true, it is a very cyclical industry. The balance I've just spoken about, not being overly exposed to a singular segment of the market. We break down the market into residential, non-residential, and your DIY cash consumer. And the residential market really came off a cliff at the start of 2009, and we needed to, and we are continuing to revamp stores to make it more accessible to a different type of a purchaser. So that was a specific lesson that we learned. At the same time, we also looked at ourselves hard in terms of issues such as brand portfolio. We've made the decision in our general building materials division, which is approximately 75% of our turnover, to go the monolithic brand route. We're starting to roll that out in a couple of days' time in the Mpumalanga region. We believe there's strength in single identity, a more consistent proposition to our customers, being able to promote and advertise key products on a national basis. So on top of that, potential synergies at the back in the future, we are integrating our ERP platform, going single ERP platform. So a lot of work's been done, a lot of work left, but we believe we've turned the corner and the performance trends will improve.
Eugene, I mean, everyone now in the building sector is talking about, tentative signs of recovery. Do you think this will be sustainable, and primarily when inevitably in a year or two's time interest rates go up?
Yeah, interestingly, with the low interest rate cycle, it's not made much of a difference to our well-being in the last few years. Exponential increases won't be welcome, but I do believe building plans passed has increased by 4% approximately in 2011. So there's a gradual improvement. It's not exponential and hence potentially more sustainable.
Okay. When are you going to return to profitability?
Well, given that the impairments, non-cash flow item, as well as the restructuring costs are once off.
You're already back in profit, effectively.
We're back in profit.
Just from a competitive standpoint, we talked about this a little bit earlier, but given the huge competition that Builders Warehouse has created, and Walmart is going to add to that, Cash Builder has also brought its strength forward. What do you think the normalized margins for you now going forward, given the intensified level of competition, would be? It's certainly probably not going to be the 7, 8, and 8% you had back in 06, but what do you think it would be now?
Well, for the second half of the financial year, operating margins were slightly in excess of 3%, EBITDA at 3.9, so approximating the 4% margin. We'll take it step by step, but we'd like to slowly but surely continue to improve on that.
Do you find that you are reactive to the competition, or are you trying to be ahead of the curve?
We certainly take notice of what our competition does. At the same time, we have to continue focusing on what we're good at. And we supply contractors well, we supply credit. We've adjusted our brand portfolio, we've revamped our stores, we can get access to more cash purchases. So take cognizance of what the competition does, at the same time really focus on doing what we do well, even better.
In terms of your Africa expansion strategy, is that in the pipeline?
Not on the short to medium term, we're focusing on our South African footprint. We've gone through a period of consolidation and we want to make sure that through focus,
you bed down.
we bed
now
that down,
your core business.
And then in due course we can look at what other opportunities there may be.
And Eugene, potential takeover target, could you be a potential takeover target? I know that's a difficult question to always ask a CEO.
That's a question that many companies have been asked in recent years. At the end of the day, that's not directly in our control. And as a management team, all we need to do is focusing on the key initiatives in the business, get the results trend up, and the rest will take care of itself.
When your thoughts on Illiad?
No,
it's very
Illiad,
difficult to ask you with the CEO sitting.
No,
Yeah, sure.
But at least he's one whole chair away from.
No, look, we've held Iliad for a long time in very selected portfolios, not in our general portfolios, because Iliad's a relatively small company. It is heavily cyclical. I think the cycle has turned. We thought so in the middle of last year, when no one else wanted to think it was turning. So the shares, the construction shares have turned, and we'll stick with this. But it is a cyclical business, but the cycle still looks in its favor for at least the next year, I would think. So yeah, and it's one of the better shares. It's directly involved with the well-being of the building sector.
You see a glowing report from Mr. Wayne McCurry. Now I'm interested to see Helo Gilso, who is sitting just a stone's throw away from you, what his thoughts of Iliad are.
I think that like Wayne, after 3 or 4 years worth of pain, and you start to see signs of improvement, I think you have to believe that, I think over the next 2 to 3 years actually, not just 1 year, but 2 to 3 years, I think Iliad will be fine. But the question you asked earlier about being a takeover target, I guess the other way to ask it is, have they received a visit from ShopRite?
Have you received a visit from ShopRite?
Certainly not.
Eugene, what keeps you awake at night? We have to ask the CEOs that question.
Well, we've done so much hard work, Brownyn. It's now about executing effectively and making sure it flows through to an improved result. And there are key initiatives in play, and you need to make sure we implement well.
So you are sleeping better.
Yes,
That's always good news.
Yeah.